Okay, folks, welcome to probably the most important edition of Thursday Night Stock Charts Live that you're ever going to see. Why? I'm promoting it. I'm hyping everybody up and trying to get everybody excited for the show, excited for a Friday, excited for the weekend. So let's begin by saying I hope everybody had an awesome week. Thank you for being here. Like, subscribe, you know the deal. Let's begin by talking about Netflix earnings. Then we're going to go into some reports that should have you somewhat bearish on the market. We're going to go into other reports, including the weekly charts that should have you somewhat bullish on the market. Let me explain. Let's first get Netflix out of the way. Let's talk about it. Netflix reported after the bell this evening and blew the doors off of expectations. We'll go to the chart in a moment. So, headline off a zero hedge. Netflix jumps after beating across the board, adding 5 million new subs. And here we have the numbers. Revenue, $9.82 billion, up 15% year on year. This is a monster quarter. And beating estimates of $9.78 billion. Earnings per share growth, not growth, earnings per share, $5.40 versus a $3.73 seasonally adjusted year on year, beating estimates of 5.12. I mean, wow. Top line, bottom line, beat, boom. And included a $91 million loss from FX. So they lost some money on currency conversion. Looks like as though it's in euros. Operating margins, 29.6 versus 22.4, beating 27.8. Their operating margins are 30%, slightly improved, monster. Operating income, $2.91 billion, up 52% year over year, beating estimates of $2.72 billion. Here's my favorite, free cash flow. $2.19 billion, that's a 16% year over year beat, and it beat the estimates of $1.73 billion. Is it a clean report? Well, you don't get much cleaner than this. Was there a fly in the ointment? Yes, there was. Netflix added a greater than expected little over 5 million subs and above the 4.5 million estimate. But, here's the but, this was thanks to EMEA, and Asia-Pac subs in U.S., Canada missed modestly, while Latin America, they spelled Latin wrong, subs actually declined against expectations of nearly 1 million increase. It's a beat, folks. This is a buy. This is a buy. We're going to talk about price targets on Netflix in a moment, assuming they close up tomorrow. And there's no reason to think that they will not. But you never know. Let's take a look at the price action of Netflix in the after hours session. Then we'll look at comments, and we'll say hello to people. We don't want to be rude. We're all inclusive here. All inclusive. So here's Netflix in the after hours session. For you options traders, though, you options sellers that were not greedy and you played by the rules, you did very, very well. The market maker anticipated move was about a $50 move. That's down from yesterday. And if you went very wide out, say double the anticipated market maker move, you're making a lot of money. You're doing well. If you even sold the anticipated market maker move using a strangle or an iron condor, you're doing well, assuming that you don't gap up even further tomorrow morning. Now, what I noticed what happens here over the past, I don't know how many years I've been doing this, is that you get to move up higher after hours on a good report, generally, except when I owned Tesla a couple of months, they had a good earnings report initially, knee-jerk reaction went up, and then it dropped like a rock. Anyway, I digress. Generally, the 8 p.m. Eastern Standard Time close, that is not, that's just the beginning of the next business day, really, because at 2 a.m., that's when the institutions are able to buy the common stock. So where we close at 8 p.m., you usually get a spike up higher. That's why I would not go shorting Netflix now. If you're out there thinking, it's not 8 o'clock yet, let me get my order out there to the short, I think you're nuts. Don't do it. Because more than likely, you're going to have Asia Pacific open up at 2 p.m., or actually earlier than that, but they're going to be able to buy U.S. stocks, and they're going to jack up Netflix into the open tomorrow. And guess what's probably going to happen at the open tomorrow? They're probably going to push it up higher. So don't go picking up pennies in front of a steamroller. Not yet, anyway. We'll talk about when that would make sense. Let's say hello to folks. All right, we have Sean. Mr. Sean, welcome. Seymour Rivers, thank you, sir. George, good evening to you. Mr. Tim, welcome. And we have Seymour there. Talon, the man, the mission. Yeah, that's a good point. I'm glad you brought that up. I wanted to talk about that because I just checked. Even the futures action, there's no activity on the Qs. There's none. NQ just opened up. This is the NASDAQ futures. Let's see what they're doing. I doubt much. They're actually down relative to the close. So good point, Mr. Talon. Jody, welcome. You joined. I had to take issue with Jody. Okay. The reason is that we have very few females. We have Bonnie Bean, lovely. We have Jody, lovely. But and we have Gay. I'm sorry, Gay, as well. Very few. We need to hear from you more in the forum. You need to come in and say hello. The female presence, takes a lot of that toxic masculinity off the chat. So please say hello, get in there. We miss you. You can't just hold it back on us until Thursday nights and lay it on us. You just hear. We need to hear more from you. Please, I beg of you, please. We miss you. We're very fond of you. All of our female companions out there. All right, Paul. Good evening to you from Southeast Florida. How are you holding up down there? What a crazy mess down there, no? My brother's in Tampa. It looks like a train wreck. All right, let's get a sip of water, and let's begin an amazing round of information I'm going to disseminate for you. So we covered Netflix, but not 100%. Let's talk about Netflix and where it's probably going from here. Now, we're going to be using TrendSpider, folks. If you're not using TrendSpider, you're missing an arrow in your quiver. It's like an archer not having any arrows in his satchel. You must have it. I use it all the time. Scanning, alerts, automated technical analysis, and whatnot. So 35% discount code below, or I'm all fancy here now. Just use that QR code. It just popped it right up in front of you. Click of a button. Very fancy, sophisticated show we have here tonight. So sign up. I give it away free to silver and gold level members. They no longer have a free trial, but I give it away free to silver and gold level members, 14 days. And for Netflix users that are silver and gold, you get it free. Okay. I want to go to the daily chart first, then we'll come back to the weekly chart. It's not normally what I do, but there's a rationale behind it. Now, you can see that I have here in dash line, these are my lines. Let's get, we'll keep this here for future reference. They dropped, actually, they broke down Netflix the day before yesterday. Yesterday, a little bit of a follow through to the downside. Today, what did they do? They sold it off. Bullish key reversal. But the however is that includes the after hours price action. Here's how it really closed on the day. Here's what it looks like in the after hours. Okay. So the reason why I said earlier, I think that Netflix is a buy if it closes up tomorrow. Does it hold these gains? Personally, I think it will. but you don't know. The market's always going to throw you a curveball. We only have a few days till the election. Lord knows what the deep state has in store for us. So anything could happen. Now, looking at price targets for where I think that we may be going, the weekly chart is not reflective of the after hours price action. I wish it were. Can I make it? No, I can't make it happen. So right now we are currently back above this lower band of the rising uptrend channel on Netflix. Where do I think that we're going? If we manage to close above, doesn't have to be tomorrow. If we close above 736.16 per share on Netflix, we're coming up here bare minimum 765.45 on Netflix. Again, if we close up tomorrow, I'm bullish. When we close above 736, we're only about $10 away in the after hours session right now from that mark. We can open up above that level tomorrow morning. That marks resistance. If we close above it, I think we're going up to 765.45 like that. So will I be shorting Netflix tomorrow on strength? No. Double no. Will I be buying? Yes. If it closes above 736.16 on a weekly time frame, we'll probably put on a long call spread. That's when you buy a deep in the money call option and then sell simultaneously a deep out of the money call option greater than 65 days. That way you have minimal time decay and you have a little bit of a hedge on your position, and the selling of the call option helps finance the trade. That's the way we do it here. Okay, let's say hello to folks that may have joined in. No more folks joined in. Quiet night tonight. Oh, Jody got back to us. Okay, good. Okay, good. Good. Paul, Southeast Florida, doing good. Awesome. Good stuff. I wanted to play something for you guys. What the heck happened to it? What the heck happened to it? God darn it. It's gone? Son of a gun. Ah, it was so funny. I lost it. God darn it. It was this really funny video. Did I retweet it? I probably didn't. That's me. I'm live. Look at that. I didn't retweet it. Son of a gun. It was the funniest thing. Gosh darn it. I'm going to give it one more minute. It was so funny.
I'm in the
God darn it. I really wanted to play this. All right. It's not going to happen. It was this funny meme that they created from last night's video, the interview with Camilla. It was just hysterical. Ah, darn it. All right, I'm sorry. It's very childish of me. All right. Well, I'm not going to find it. It's gone. Jesus Christ, is that real? You got to question everything you look at nowadays. I'm not going to find it, folks. I wanted to play it for you. If I find it while we're live here, amongst all my tabs, I will play it for you. Pissed me off. Okay. I don't believe I lost this. All right, I'm boring everybody to tears. I know. Okay, I'm going to give it up. All right, let's talk about earnings. All right, so tomorrow we have not much happening for the remainder of the week. Some regional banks coming out. P&G comes out. Amex comes out tomorrow. Other than that, we'll be looking at next week for market moving events. In terms of the Federal Reserve's balance sheet, the balance sheet continued to decline this past week, but the rate of change of the Federal Reserve's balance sheet is really beginning to wane. It dropped a minuscule amount from last week. Last week it was $7,046,000,000,000, and we've come down about $7 billion. That's nothing over the course of a week for the Federal Reserve. But I think what they're doing is that, I'm going to talk about this in a moment, they are getting ready for the next round of QE, quantitative easing. We'll talk about what that is in a moment. Basically, let's just stick with it. Let's stick with what this is, right? This is quantitative easing. When yields are going up higher, on the longer end of the spectrum, 10-year, 20-year, 30-year, the Federal Reserve can't do much about that. All they can do is lower the Fed funds rate. So that reduces short-term interest rates. To influence longer term, they need to go out into the marketplace and they need to buy 10-year, 20-year, 30-year paper. That's why you get the Federal Reserve's balance sheet going from a low of $3,700,000,000,000 in 2019 to a high of around $9 trillion, like that. So they're trying to roll off this debt off their balance sheet only to get ready for the next explosive move up higher. As Peter Schiff has always said, the quantitative easing is a monetary roach motel. You can check in, but you can't check out. Not without a disaster from happening. So ultimately, what they're going to have to do is that they are going to have to drive this balance sheet up way beyond where it was here at $9 trillion. You're talking upwards of probably $20 trillion of a balance sheet at the Federal Reserve. So why are they going to have to do that? It's pretty simple. All you need to do is take a look at the 10-year yield. This is a weekly chart of the 10-year yield. Does this look like it wants to go down? It looks like it wants to go up, and bonds down. I pulled up. I own bonds, the TLT, and I went in and checked my portfolio today. And the market was up. By and large, we have net longs on, and I was down on the day. What drove me red on the day was that the TLT, the 20-year bond ETF, got hammered. Here it is. This is a weekly chart. Let's go to the daily chart. Hammered. Down over 1.5% in a single day. So while what should have been a very good day for us here was not, because of the bonds. And that's what prompted me to take a look at the yields and how they were looking on a macro basis. And I got to be honest with you, it's very, very concerning that bonds look like they want to break out. Oh, excuse me, bond yields want to break out. So here's resistance level primary. Here's resistance level secondary. Folks, I may be going in and selling my bonds tomorrow, depending upon how they close us out on the week, because we broke out last week. This week was a retest of the breakout point last week above this secondary resistance level. It appears as though we're heading up to the primary resistance level. What does that mean for bonds? They go lower. This puts the Federal Reserve in a very, very bad position because yields on mortgages, they're supposed to be coming down. It's going to be very difficult with the 30-year bond moving up higher. Very, very difficult. So that puts them in a bit of a quandary. And at some point in time, they're going to have to say, what we're doing is not enough. We're going to have to take the balance sheet and take it up a lot higher. And once we get on that crazy locomotive of buying back our own debt, the rest of the world is already saying, you guys are out of your minds. You have inflation, which is not under control. The last CPI and PPI reports showed that. You cut by 50 basis points because the market said they wanted it and you delivered. So you don't care about inflation. That's clear. So the bond market right now is saying, we don't want your bonds. We don't want your bonds. As a matter of fact, we want to get paid more for the debt that we're lending you. It's like going to your creditor, going to your local bank, and you have a bad credit score. Are you going to pay a higher rate or a lower rate? You're going to pay a much higher rate. And this is what the bond market is telling us right now. You need to pay up on yields, but we can't afford it because we have so much debt. We are paying interest in excess of our military, drew a blank, in excess of our defense budget. So we can't afford it. And they still depend upon the printing presses at the Treasury to go out and have multi-trillion-dollar deficits every year. It's unsustainable. So it appears as though we're heading into the final innings of whatever the heck this is going to be, the everything bubble, whatever they're going to call it. I'm going to pause here. I'm going to remind folks before we move on any further, this is the Bull and Bear Banter trading community. I'm going to put a link in front of you. If you want your request reviewed tonight, you need to enter it into the forum here, right here. All you need to do is log in. No credit card required. Takes 2 seconds. I'm going to copy the link. You use a QR code that's going to be in front of you in a moment. There you go. It's right in front of you now. So if you want to get your symbols reviewed, enter them right here in the feed. Head on over to the feed. And here is the Bull and Bear Banter chat room. Great people in there. And see you on the other side. Okay. Economic data. Empire State Manufacturing Survey. We're going to talk about this in a moment. This is an absolute train wreck. I'm going to skip over it for now, but look at this. The expectation was for growth in the Empire State. We got double-digit contraction. Import prices, I don't know what the expectation was, so I can't speak to them. They were positive, though. Initial jobless claims missed expectations, which is a good thing. Retail sales came in hotter than expected. The Philly Fed manufacturing index, wow, that beat by a mile. That explains the gap lower on bonds. Business inventories met tomorrow, housing starts, building permits. That's a forward-looking indicator. So that is economic data. Valuations of the market, the Schiller PE ratio, 37.2. We're closing in on the highs of October 2021 at 38.58. We're not that far off. Yield curve. Weekly chart down on the week. The however is, we are uninverted. And we are well off the lows of the month. This is a monthly chart. Very bullish setup here. Yes, we're down on the month, but we're off the lows. We have a lot of trading days left to go. So, moving on. UMISH Consumer Sentiment Survey. Consumers have almost never been so pessimistic about the future. Americans' expectations about the financial situation over the next 5 years has dropped to its lowest level in 11 years. Household expectations have fallen in a near straight line as inflation persistent and unemployment has risen. So long story short, the consumer is not feeling good. Add to that job openings have fallen off of a cliff. So here's the way it goes, okay? The way the cycle goes with jobs when you are nearing recession, or in fact, if you're in one, job openings contract because employers say, you know what, I'd rather offer more overtime to my people rather than putting on new people who I may have to lay off pretty soon. I don't know what the future holds. So what they do is they hold off on posting that new job. Now, you're seeing, as reflected here, job openings are declining rapidly. When was the last time we saw that? Well, a couple of times in the past in this chart. COVID, financial crisis, and prior to that, .com. What happened due to equities during those time frames? They were annihilated. Current business conditions. I just mentioned this earlier, talking about economic data in the Empire State, New York State. We went into expansion here in September, August and September. Now we crash back down into contraction area as represented in the line in black. Not very good. Add to that the fact that the Chicago area has been in contraction ever since. Actually, I can't say that. Ever since, in reality, the ramp up in employment and business conditions or business activity in 2020. But in reality, if you X out this spike up, Chicago has been in contraction since 2009. It's never recovered fully from the financial crisis. And in reality, it's never recovered from the 1990s. You've had spikes up higher, all because of QE. And other than that, absent QE, Chicago is just dead. Now, to some bullish stuff. We don't want to be always pessimistic. We talk about the negative, then we leave it off with the positive. So, TZ Burton, welcome. Welcome. Yeah, I booked profits on about 75% of my position. We did about 19.8%. I did a video on SoundHound over the weekend. If you didn't see it, I still own my original shares, but our trading position I took off the table. We made, I think it's 19.8% on that trade. Yeah, Peter's great. Horrible with stock forecasting, excellent with economic predictions. I listen to him usually he has his podcast out on Saturdays, so I'll be on the elliptical. I'm listening to him at the gym. But always a little bit too much commercials nowadays. But otherwise, huge fan of Peter Schiff. I would like to see him in the administration, if it is a Trump administration. Okay, moving on to good news. Good news. Bullish percent index. Now, even though the equity markets are up on the week, the bullish percent index is down. And that sounds counterintuitive. But the reason why it's good, it's because of our contrarian mindset, which is you don't want overly optimistic traders out there. You want cautiously optimistic. You want the markets to climb a wall of worry. So if you have equities going up higher, yet you still have pessimism out there, that means you still have more upside in the equity markets. So I view this, even though we're down on the week, sentiment-wise, it's actually bullish for equities. There's not a lot of overly optimistic people out there. The markets are broadening out. I want to go to here first. Market breadth, whether it be the NYSE, SPX, mid caps, small caps, they're all moving up higher and validating the move up higher in the S&P 500. You got to have this. This is the mother's milk of a bull market. Absent that, I would be more worried about the market. But we have broad-based participation. If anything, the Qs have been lagging. They attempted to recapture support today. They failed after breaking down a couple of days ago. Now, taking a look at the small caps, we're at multi-year highs. We own this, the S&P Small Cap Index. These are the ones making money. They're making money, and they are at multi-year highs. To be in this index, you must be making money. In the rut 2000, I don't believe that to be the case. Fact check me on that. Why else am I still bullish on the equity market? Look at Bitcoin. Bitcoin is not the new gold. It is a speculative asset, and we have broken out on the week. We are benefiting from it because we are long of Bitcoin. We are also long of Coinbase. So making for a pretty good week, even though Coinbase was down on the day today. Damn, I can't find that video. Tick me off. It looks just like this, but they overlaid memes on it. Oh, wait a minute.
Of them.
Was it Musk that put it out? It may have been Musk. I got a kick out of it. Maybe it wasn't him. Damn it. I can't believe I can't find that video. It was so funny. Oh, no.
People have
been. God darn it. All right, I'm going to give it up. All right, got to give it up. Okay, moving on. Let's talk about the weekly charts. Then we'll do some chart requests. What time we got? 6:36. We're making good time. Let's talk about how we are poised to close out the new trading week. One trading day left to go. So what we're doing right now is we're prepping for next week. Forget about this week. It's what you see is probably what you're going to get for the remainder of the week. Not in all cases, but in most cases. So when I talk about the weekly charts, understand one trading day can mean a lot, but it appears as though macro view that we're going to close out the week pretty strong, broad-based rally. Nothing frothy yet, except for the banks. The financials are extended. We're going to go to that chart in a moment. So let's get to it. Even though inflation is still rising, they're still going to cut rates of high probability of a quarter basis point cut. So markets are happy, free money coming, they're good. We already went over this, we can skip. This we skip. Oh, I didn't want to skip that. Damn it. I wanted to take a look at the CRB commodity index. Here we go. Okay. CRB commodity index. This is also going to help buoy stocks. While they closed out the week off the lows last week, they couldn't hold last week's support level at current. One trading day left to go. But right now, at the time of this recording, we are down below a support level on a weekly time frame. What does this mean for the Federal Reserve? It gives them breathing room for inflation. They can point to this. They can say commodity prices are pulling in. Therefore, we don't have to worry about inflation. What are they going to ignore? They're going to ignore housing. They're going to ignore insurance prices rising. They're going to ignore healthcare prices rising. They'll point to this and say claim victory. But right now, this is good for the markets. They're happy with it. Another reason to be bullish. Yields. Flirting with a breakout here. We are right at resistance. Tips. Pulling back. Why? Yields are moving up higher. Again, taking the pressure off of the Federal Reserve. The U.S. dollar, shockingly, is about to take out multi-year highs. Dare I? Yeah. Shocking. But I'm going to tell you what's even more shocking in a couple of minutes. Stick around. Funny videos on X have been sent out where they go into even. Yeah, I usually repost them, and I meant to. And it's killing me that I didn't. It was so funny. It was very, very immature. The exact type of comedy that I absolutely love. A 3-year-old would laugh at this, so therefore it's right up my alley. Anyway, U.S. dollar, man. If we break out to new highs, I'm telling you right now, we're going a lot higher. That's not what I wanted to do. We're going to have resistance here. No volume. But amazing price action. Let's go to daily view here. Amazing price action on the U.S. dollar. Euro falling apart. Yen falling apart. Bitcoin, we went over, breaking out on a weekly time frame. Bullish. Volatility. Now, remember last week, we broke out on volatility on a weekly time frame. You can forget about that very, very quickly when you have a bull market going on. We don't forget. We watch this very, very carefully. We watch it every single day, every single night. And at current, while we're down on the week, we're still holding the breakout point. One trading day left to go. It'll be interesting to see whether or not the pretty good earnings that we've gotten this week, will the markets get sold into? Are the valuations of the market, which is what we just spoke about, we're just off the highs of, we're about 1%, 1.5% off the highs of October 2021 on the Shiller PE ratio for the S&P 500. Are these earnings priced in? It doesn't appear as though they are right now, judging from the price action of the financials. Very strong price action. We'll see how Nvidia, Netflix holds up tomorrow. Do they close at the highs of the day? If they do, it's going to be rock and roll time into next week. Let's check out the daily chart of the VIX. Not a lot of movement here today. We did break support. Let's modify our pennant formation. Now a flag formation. In reality, it's more of a downtrend channel, to be honest with you. And we bounce right off of that lower band. Do we rally tomorrow? Dow Transports. Now, I'm very, very surprised to see this chart right now looking the way it does. We're up on the week, but we gave up a lot of ground today. I haven't looked at this chart yet today. The weekly chart, I had expected that this would be a lot more bullish than what it is right now. One trading day left to go. A lot can happen. Here is your breakout point. At current, we have a breakout on the Dow Transports. Daily view. Brutal. Down over 1 1/3%. Failed to hold that breakout point. I still have to give the odds to bulls here. Let's take a look at the Dow Jones Industrial Average. Dow Jones Industrial Average up on the week by over 3/4 of a basis point. We are at current above a breakdown point. We opened outside of this ascending wedge formation. At current, we are back above it. Do we close above this lower band of support in blue? That's the big question. Volume, granted, it's an abbreviated week, but volume is quite light. And you can't just dismiss the abbreviated week. Let's take a look at the volume on a daily chart. And volume has not been great. Volume has been good to the downside, not great to the upside of the late. Not really what you want to see in a market that's making all-time highs. Ideally, you're seeing rising above average volume. You're not getting that. Or at least average volume. Doesn't have to be above average. S&P 500 weekly view. Almost a doji star formation on the week. This would mark our 6th consecutive up week. Certainly not unheard of. Momentum is measured by Stokes, getting long in the tooth, but they could stay overbought. A lot of people misuse this indicator. They think that, stochastics are above 70 or 80. I got to short it. No, that's so stupid. No. RSI, we've broken out on the week. Look at the volume. I drew this line a couple of weeks ago. Horrible volume. Let's go daily view. Again, looking at the daily volume here, you cannot use it's an abbreviated week as an excuse. Those who wanted to buy on Monday but couldn't because the markets were closed could have bought on Tuesday. How's the volume been? Horrible. Horrible. So the one thing I'm going to warn here, what takes days or even weeks to accumulate in share price appreciation only takes a day or two to wipe away. So be careful here. This is being lifted up by a very, very thin amount of computerized trade and shorts getting squeezed out of positions. People are trying to short the market. What are the computers doing? They're squeezing them out on very thin volume. And technically, we had broken down yesterday and closed below this lower band of support. Let's say we closed at it. Today, where do we close? Closed at 582.35. We're below the lower band of daily support. Technically, this is a breakdown. Momentum, lower highs. I'll be honest with you. I didn't look at the daily charts before or the weekly charts before we went live. I fully expected to be a lot more bullish than what I am right now, to be honest with you. Let's see how they close this out on a daily time frame. And this kind of explains why the Qs aren't moving in the after hours session on the Netflix earnings. We'll go to the Qs in a moment. This is not a good close. It's a horrible close. They gapped us this morning and they faded us this morning. The S&P 500 equal weight. The equal weight keeps every stock in the S&P 500 has a vote, an equal vote, right? So the S&P 500 or the SPY is a market cap weighted ETF. That's what we were looking at here. So this is being influenced by a few stocks. What we want to do is acknowledge the fact, as we mentioned before, we have a broadening out of this market. We have broader market participation. So it's not the Mag 7 names that are driving everything up higher right now. It's more broad-based, and I would argue more bullish. Now, looking at this chart, weekly time frame, we're holding the lower band of support. Granted, we are entering an area where if you want to call it the apex of an ascending wedge formation, fine. Call it what you will. Call it cupcakes. It doesn't matter. It's still, what matters is that there's still room to run to the upside here. And I would not go shorting the equal weight basket right now. Perhaps the SPY at some point in time, but the equal weight basket looks like it still wants to go up on a weekly time frame. Let's go to the daily chart. We were down today. Closed down on the day. So let's take a look at the Qs. And we did add more, We did add more. I'm sorry, folks. I'm having a caffeine crash right now. To our short position of the triple Qs, just prior to the close. Why? Let's talk about it for a moment. We closed out a good portion of our short position on the Qs a couple of weeks ago. I expected a rally. We got the rally. But then something happened the other day that got my attention. Now, before we go to the daily chart, which is where that attention was grounded, let's take a look at the weekly chart. And we are down on the week by nearly a half percentage point. I mentioned this earlier. The Qs have been a laggard. And we are holding the lower band of support. RSI could be rolling over. One trading day left to go. For all I know, we're going to close at all-time highs tomorrow. Volume, very light to the downside. Let's take a look now at a daily chart. And this is what caused me to go leaning short this morning or this afternoon. When we were talking about the Qs going into the back half of the week and going into Netflix earnings, I said expect, because we broke down here on Market Wrap last night. I mentioned this breakdown and subsequent reversal is going to get met with buying. They're probably going to bid the market up into 495 to 496. Where do they rally us to? A high of 496.49. What did they do? They faded it, and that's what we betted. I didn't go adding when we hit that 496 because I'm not going to take that risk. I want to make sure that it's probably going to fail. And today's fade tells me that it may want to move up lower, and the lack of after hours price action on the Netflix earnings, 30-minute chart, look at how they close this year, is concerning. Let's take a quick peek at the futures. Maybe the futures came back alive on Netflix. Let's see what they're doing now. Here's the NQ. Oh, we're up 0.20%. This is only a 15-minute chart. Let's see what we look like on a 4-hour chart. We have a lower high. Here's our intraday trading range. So we're up at current, but hardly enthusiastic about the new trading day. The equal weighted Qs, bearish key reversal. So this is a broader based view of the triple Qs because, again, as referenced with the S&P 500, the SPY, the QQQ is a market cap driven ETF. The QQQEW, all 101, I think there were 101 stocks in the triple Qs, they have an equal vote. So this chart here is pretty bearish. On the week, daily chart, outside reversal bar or a bearish engulfing of yesterday's price action. This is pretty weak. Small caps. Now, I'm really surprised here. I got to tell you, we own some small caps. It's not a huge position, so I'm not going to pretend that it is because, generally, small caps are going to trade inversely of longer-term yields. They're not. They broke out on the week. Here's the daily view. They closed down on the day, but this is hardly a bearish setup. Would I buy them here? No, I wouldn't because we're so close to the third standard deviation Bollinger Band. We need to pull back and another running start going into next week. So I wouldn't be a buyer here, but they're very, very strong, very, very strong. Let's check out the mid-cap ETF. I mean, beautiful. Up over 1.33% on the week. How's volume? Horrible. Declining sequentially. Horrible volume. What did they do on the day today? Filled candlestick. We're very close to the third standard deviation Bollinger Band. I think we're pulling back. I think we're going to pull back. We're frothy. Not frothy on Stokes. Not frothy on RSI. There's more room to run there. But relative to the 2 and 3 standard deviation and the 3 standard deviation, far more important and influential, we are overbought. And the last time we got like this was back here, and we sold off. The banks, also very extended. This is a daily chart, very extended as measured by the third standard deviation Bollinger Band in red. Doesn't mean they crash. They can trade sideways and resume the uptrend. RSI has plenty of room to run. Weekly chart of the banks, very strong. Volume light, but it's probably going to roll in volume better than last week, and it's an abbreviated week. So we got to give props what props are due. Technology, not looking great. Semis, not looking great. Down on the week by nearly 2%. The software ETF, we own this IGV, down on the week now Let's see if we hold weekly support. I think we do. Biotechs up on the week, but hardly enthusiastic. Consumer staples, I would not buy these. I think they're topping out. Discretionary, I don't like this space whatsoever. They may rally tomorrow on Netflix. Daily chart. I'm not loving this. I wanted to short it back here. I didn't. Emerging markets looking very, very good. So here's where we're going to switch gears a bit. You know, we talk about inverse correlations. As I mentioned earlier, that the small caps generally do well in a declining interest rate environment and vice versa. They don't do as well in a rising interest rate environment. What are the small caps doing this week? Well, they broke out. What are yields doing? They're up big. What's the dollar doing? Up big, near multi-year highs. Emerging markets are highly inversely correlated to the US dollar. Emerging markets ex-China are up on the week. And it doesn't end there. We have more. Emerging markets with China avoid. That Chinese trade appears to be taking a rest right now. Energy down 2 1/3% on the week. I think we're going to retest this 87.50 mark. And I'm probably going to buy, depending upon the performance of oil, I'm probably going to buy a lot of energy stocks fairly soon. But not here. I don't like this. We need a washout, a retest of weekly support. We're not there yet. I'm going to hold out for a better deal. Oil on the week, energy stocks highly correlated to oil. And what's oil down on the week? 7.25%. And it looks as though it wants to go lower. So what does this tell you about the growth of the economy? They don't want any oil. It means there's no demand. So we need to take a look at the markets through the lens of what are the charts telling us? They're telling us that the lack of demand in oil is indicative of an economy that is not thriving. Or else, if it was, oil prices would be going up. And also take a look at natty gas prices. Here's natural gas. Rolling over. This is Boyle, leveraged product. But you get the drift. It's rolling over. Gasoline prices. This is good for the consumer. I'm happy for my fellow Americans. Cheaper gas prices. I'm on board with you. Very weak on the week. This is good. This is all good stuff for the consumer. But it's indicative, folks. It's indicative of a slowing or recessionary economy. Now, if they begin to start at the printing presses again at the Federal Reserve, you need to own all of this. CRB commodity index, oil, natural gas, anything that you could drop on your foot and it hurts, you want to own. You got to own stuff. Right now, the only thing you want to own is gold. Think about this. If you would have told me 2 years ago, Bob, yeah, the dollar is just about to make multi-year highs. Bond yields are up. And the Federal Reserve just cut rates by 50 basis points. And gold just hit an all-time record high. I would have said you're nuts. Because the dollar and gold are inversely correlated. And even more so inversely correlated are the gold mining stocks. We're about to hit a multi-year high on the US dollar, and the gold mining stocks are also making multi-year highs. You can't make this stuff up. I think it's going to take the Federal Reserve to go in and to begin to print paper, more debt, buy 10-year, 20-year, 30-year bond paper to get the dollar to crumble. They want that. They want inflation because it increases tax revenue and it inflates away our debt. So they're not going to put up with this strong US dollar stuff. So at some point in time, they're going to go back and they're going to say these rate cuts are not enough. And I think the gold market is telling you that right now. They're saying, we know what they're going to do. You got to buy gold. Inflation be damned. They want inflation, and inflation is what we're going to get. You got to own gold. Gold mining ETF, the leverage product, we own this as well as the GDXJ, up over 7.33% on the week. This is broad-based. Silver, weekly chart, up over a 0.5 percentage point, leverage product. Silver miners up 1.62%. Getting the drift here? They don't care about the dollar. They're looking past the US dollar right now. They're saying, man, they're going to start at these printing presses and the dollar's going to drop like a rock. Palladium, which we own, consolidating. I may buy more than this. Wow, I like this. We broke out. Now we're retesting. We may get a rip your face off rally here. Let's do chart requests and call it a good night. God, I wish I could find that post. I'm going to spend 30 seconds trying to find that post. Cute kid. All right, I'm not going to find it. I would have thought they would be reposting that over and over again. All right. I give up. I'm not going to find it. I'll find it. The minute I sign off, I'm going to find it. I will post it in the Bull and Bear Banter forum. All right. Let's close it out. Let's talk about chart requests. Yeah, TZ, I get fixed on something. It's like it's OCD. It's really kind of crazy at times. All right, we got Sean with Dominion, Talent, AMZM, Andre, AAL, Tim, SoFi. All right. Let's do this. Folks, again, we're using TrendSpider, 35% discount code below. Great sponsors and a great product. I use it all the time. And don't forget, like, subscribe. You know the deal. I don't have to tell you that stuff. All right, let's begin with Dominion. That would be wrong. That would be Ford, Bob. D. Dominion. Buy it. It's going up. Right off the bat. Base. Here was your inverted head and shoulders setup. There was your neckline. And we broke out. Now we have higher lows and higher highs. And we have just broken out. I don't want that one. We have just broken out above resistance. One trading day left to go. But Dominion looking very good here to the long side. I would wait for a retest until next week to buy this. I would look to enter at around If you can get a 58 handle, I'd be a buyer. Daily chart, you're going to get a 58 handle. You had a reversal bar on the day off of this third standard deviation Bollinger Band in red. Wait for a 58 handle, and I'd be a buyer of Dominion off of that support level. AMZN. This is a heat map implying where there may be some resistance above. We're right in there right now. Let's go to the weekly chart to smooth out the noise. Yeah, right up here at around 189.19, you have some sellers up there. Let's take the heat map off. Let's throw up automated fibs, Fibonacci's. Resistance immediately above at 190.59. Trend lines, automated trend lines. Not much on a weekly chart, but we can manually draw these as well. And we're going to do that in a moment. We broke out last week. We did a retest this week. I'm okay with nibbling here, but just be aware, they haven't reported earnings yet. Good price action, higher lows, higher highs, good consolidation. Amazon's looking favorable. AAL. I don't remember the last time I owned an airline was. Let's clean this up. Let's take these off. Okay. I just want to change the color of the line, damn it. There we go. All right, so you're going to have resistance right up here at 13.64 per share. That's probably where we're going, daily view. I think my ancestors over in Ireland, they charted stealing horses and bar stools. Daily chart, it looks as though we're probably going up higher here. I'd be watching for a price target, $13.63. Last one up is SoFi, S-O-F-I. Weekly view. I'm not a buyer here. It hasn't broken out yet. Maybe by tomorrow it will, but we're at resistance. Give me a close above $10.10 per share. I'm interested. If not, I'm not interested. In fact, we broke out. Did we break out here? I don't want to. Yeah, we did. We had broken out here on the 14th and failed to hold it. We need to be back above $10.10 per share before I got involved with SoFi. I would not buy it in advance of earnings. Folks, thanks for being here. Don't forget, TrendSpider 35% discount code below. I give it away free to our silver and gold level members. And like, subscribe, you know the deal. And don't forget the Bull and Bear Banter Forum. Great people. And please sign up. Make sure you say hello. See you on the other side. Have an awesome